Markets were weak throughout the trading session, with the S&P down 0.59%, closing at 64,1137. But the Qs, on the other hand, were actually down 1.36%, and we saw a pretty significant move out of mega cap tech. In terms of the S&P, though, we are at a near-term support level around the 6,400. This was resistance at the end of July, which finally broke through in the middle of August, and we've been above that level up until today. So the question remains is if this will be a support which we will bounce up into these larger game exposure concentrations to the upside, or if we're going to see a failure and a further retracement down to the 6,200 level. 6,200 is our next level of support, and so this seems to be a pretty crucial support zone on a short-term basis for the markets overall. In terms of total gamma exposure, the S&P is still in positive gamma exposure territory at 285 million, but when we look across the other index ETFs that we track, for example, the SPY sitting at negative 1.5 billion at the close today, the Q sitting at negative 934 million, and IWM sitting at negative 440 million. So we've seen this before in the gamma exposure data, where a lot of the index ETFs are dipping into negative GEX territory, but the S&P remains in positive gamma exposure. So we'll be monitoring this right at the market open in the morning to see whether the S&P does follow along into negative GEX territory. Taking a look at the volatility index, the VIX did tick up 3.87%, closing at 1557, but this is still such a low VIX that we need a lot more volatility coming into the mix to really see a market sell-off. One thing I will note is that we are above the 50-period EMA on the 15-minute chart, and so it does appear that a new trend has started to the upside in the VIX, but we didn't really see that much volume in the options market at higher strikes. So this may be a short-lived VIX that maybe spikes up to the 16 or 17 level. The 16 gamma exposure concentration is the largest GEX level at this point. And just looking up the options chain, we really did not see any sizable volume coming in. So market participants clearly are not that concerned for an immediate volatility spike. Next, let's take a look at a few names that we are actively trading. We'll start with CrowdStrike. We took a short position in CrowdStrike about a week to week and a half ago, which played out within 2 or 3 days down to the 420 level. We've seen some consolidation. You can see here on the daily candlestick chart. Today was down 1.82%, closing at 418.60, but the gamma exposure does look skewed to the downside all the way down to at least the 400 strike, and we're starting to see gamma exposure building at some of these lower strikes as well. CrowdStrike has had various issues over the past year or so, and it does appear that weakness is continuing in the stock price, especially as we see it trading below the 50-day EMA, which is this red line on our chart. So the trend is down and basically has been down since June, and the overall gamma exposure picture is pointing lower as well. So we are considering putting on a bearish position targeting that 400 strike over the next couple of weeks, and that's something that we'll be looking to add into our portfolio, which, by the way, you can track our trades in real time by heading over to geeksoffinance.com and becoming a member. I'll put a link in the description below for you guys to check that out. Next, let's take a look at AMD. AMD down big today, 5.44% to the downside, closing at 166.55. We're getting ever closer to this 50-day EMA sitting at 154.81, but we are still above it and it is rising quickly. So we were looking for any kind of move below the 170 level. So we got that today, and we're starting to enter into this zone where it looks like a really good risk reward setup for potential support above 160 and a bounce back up into these larger gamma exposure concentrations to the upside. We're still not seeing major volume at lower strikes. Most of the volume is skewed to the upside, and so that just tells us at this point in time, this is most likely just a pullback that eventually could be a buy the dip opportunity for investors. And so with AMD trading well above 180 just a few days ago, now into the mid 160s, this is starting to look like a pretty good setup for larger prices. NVIDIA does have earnings coming up next week, so that is something just to keep an eye out for. But we are looking to take a longer-term swing position, potentially out into September or even October, targeting some of these higher strikes, which, by the way, if we scroll up a little bit here on our chart, we can actually see that there are larger gamma exposure concentrations, the largest being at the 200 strike. So this looks like the trend is still pointing up towards that 200 strike. despite this near-term pullback and weakness that we've been seeing. Next, let's take a look at Palantir. Palantir down big today, down 9.35%, closing at 157.75. This is a healthy correction for Palantir, even though it is pretty nasty over the last few trading sessions, but right into the 50-day EMA at 154.22. And look how well this 50-day EMA has been holding during this most recent leg of this uptrend rally. And so coming into this level, I wouldn't be surprised if we see a pierce further through this level, maybe down to the 150 strike. But look at the gamma exposure concentration between 160 and 200, and almost no volume in the options market below that 160 level. So we're really dipping far below where most of the volume and open interest is in the options market. And so typically in our experience, that doesn't tend to last too long unless we see in the next couple of days market participants really starting to participate down here to the downside. But so far as of today, we're not really seeing that. It just looks like maybe a few major investors unloading, maybe catching some traders off guard with the unwinding of some big positions. But we still think the uptrend is intact, and the gamma exposure data is pointing to higher prices over the coming weeks and months. And you can still take advantage of our limited time promotion, $300 off our yearly portfolio manager tier subscription. Use code SUMMER2025 at checkout. We do have a few spots remaining, but we will be ending this promotion soon. Definitely take advantage of it while you can. Our members get access to our gamma exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies. And you'll also get access to the premium channels in our community Discord. You can track our trades in real time, and we've got a ton of great traders in there sharing their own trade setups as well. So you definitely want to check that out. I'll put links in the description below to all of that. Thanks so much, everybody, for watching, and we'll see you guys in the next video.